And the South Korean won has staged a dramatic turnaround, shedding more than 170 won against the US dollar as a weaker greenback and a surge in dollar selling here at home pushed the exchange rate into the 1,300 won range. Our Park Jun-han has more.
Just 2 to 3 months ago, market watchers were bracing for the exchange rate to breach the 1,601 mark against the US dollar. However, the trend has reversed sharply. According to data from the Bank of Korea, the exchange rate, which touched the 1,550 to 61 level between May and July, has now dropped to the 1,381 range. During this short period, the US dollar has depreciated by 12% against the Korean currency, meaning the won has gained 13% against the greenback. A primary driver is domestic companies converting their dollars into Korean won. In July, Korean tech giant SKhainicks raised $26.5 billion through an American depository received listing. With billions of these dollars flowing into the domestic exchange market for reinvestment in Korea, it has effectively helped cool down the recent dollar price hikes. Other major exporters in the semiconductor and shipbuilding sectors are also converting their overseas holdings. Adding to this momentum are the massive shareholder return plans announced by Korea's tech titans. Samsung Electronics plans a share buyback and cancellation program worth between 90 trillion and 110 trillion won. SKhainicks is also stepping in with a 40 trillion won stock repurchase and cancellation plan. While it is unclear how much of the dollar proceeds will actually be converted into won for shareholder returns, these plans, worth a combined 150 trillion won, could further strengthen the won. Monetary policy also played a crucial role. In a rare move, the Bank of Korea has raised the country's benchmark interest rate for a second consecutive month, from 2.75% to 3%, taking preemptive action to contain inflation. The widened yield gap between Korea and the US has now narrowed to 0.75 percentage points, effectively making the Korean won stronger than it was a few months before. Meanwhile, a weakening dollar is pushing investors toward alternative assets. Following the U.S. Treasury's announcement to expand long-term debt buybacks, confidence in the greenback has softened. Higher Treasury yields usually support the dollar, but when yields rise due to fiscal concerns or policy interventions rather than expectations of tighter monetary policy, the dollar can weaken instead. As a result, Bitcoin recently broke past the $80,000 mark for the first time in over 3 months. International gold prices also rebounded from below $4,000 in June to surpassing $4,620 per ounce as of Thursday. Ultimately, an excessively high exchange rate burdens the domestic economy by driving up import prices. That is why financial authorities have been stepping in to cool down the overheated market. Park Jun-han, ArirangNews.